Hey friends, it's Steve with Hudson Advantage Realty, where we guarantee to sell your home or we'll buy it. In this market update series, we've been looking towards 2022 and projecting what we can expect in the real estate market in the year to come. In our last video, we began looking at interest rates and how we can expect them to change in the new year. Here are the latest projections on interest rates from Fannie, Freddie, the MBA, and NAR. More acronyms and initials than you could ever want. You can see somewhere around the middle of the third quarter of next year, rates being about what? 3.5%. Right now, where are they? About 3%. So let's take a look at the Freddie Mac Visual right here, and you see the drop in rates through the pandemic and how they've started to inch back up. Freddie Mac's saying by the third quarter of 2022, it could be around 3.7%. Now, we don't know this rate for certain, but we do know, no doubt about it, interest rates are going up. Let's look at an example. You're getting a $400,000 loan to buy a home. If we look at 2 3/4%, where we've been for quite a while, that payment looks like $1,633 a month. If we're at 3%, it's $1,686, just a little bit more. But if rates continue to go up in the next year, knocking on 4%, that rate is going to require you to buy a lot less home. For the same mortgage payment you'd be paying on a $400,000 loan, next year you might only be able to have a $340,000 loan. That's going the wrong way. Now, we don't want to convince anybody to do anything they don't want to do, but we want to show you that as prices rise, as rates rise, it's going to cost more in the long run to buy a home, and certainly to finance that home. Before ending today's video, there's one more thing I want to mention: inflation. DS News came out with this quote, and I thought it was excellent. Notice it. Home ownership is one of the fundamental keys to accumulating wealth in America. Hence, it has been integrally linked to achieving the American dream. Not only can owning a home provide a roof over your head and a secure place to live, but because mortgage payments generally remain fixed while rents rise over time, a home can be a very effective hedge against inflation. Yes, it's true. Inflation's being talked a lot about right now, and a home is a very effective hedge against inflation because you have what? A fixed payment. The quote goes on to say, together these features can give homeowners an enormous advantage over renters when it comes to accumulating wealth. The opportunity for home ownership is not just for shelter. We know there are tremendous non-financial benefits of home ownership, but it also helps you to build wealth for your family. The Home Price Expectation Survey just came out. I know you were waiting for it. If you look at a $350,000 home value over the next 5 years, that purchaser stands to gain about $111,000 in increased equity if the forecasts are true over the next 5 years. That means if you put 10% down, your equity would rise from $35,000 to $146,000. You would have a 417% return on your investment in just 5 years. Where else can you get that? It's truly an investment worth making. We're going to continue in our next one in this series to look at the trends for next year. Don't forget to subscribe. And when you're ready to buy, sell, or invest in real estate, give us a call, 704-659-5056, and we'll be happy to arrange a free, no obligation consultation. Thanks for tuning in, and we'll see you around the neighborhood.